Hey guys, this is Adam from Dodjit.com and this is your video briefing for Monday the 13th of July 2009. Now, the first chart that I've brought up is the US dollar index. You can see right over here the USD, that's the symbol, dollar USD. Now, normally we do start with the S&P 500, the broader market, and the reason I'm now focusing on the US dollar is because I think we've really just flogged the S&P 500. There's not really much to say about the S&P 500 apart from the head and shoulders pattern. We might show that in a second. And now we are on major support of 880. We're going to just have to see how it plays out. I think we're entering now this summer season. It's going to be a little bit slow, and you can just see that on the dollar. Check this out. Since the beginning of June, we haven't really been going anywhere. We've got this trend line coming down. That's still far away from us, around 82. We are at the moment stuck between support and resistance. As you can see, we're like this. Where are we going? Where are we heading? To tell you the truth, I don't think we're heading anywhere at the moment. We're looking for this spark to really set off some fire in the S&P 500 on stocks, and I think that is also reflecting the currency market at the moment. I don't know if you've noticed, we are starting to range on a lot of the different currency pairs, on the euro dollar, on the pound dollar, and the markets are really becoming a little bit stagnant. And what tends to happen around summertime is that a lot of people tend to go on vacation, and the markets normally quieten down a little bit, and well, I wouldn't say they get boring, but you know, normally if you just listen on Wall Street, you can normally hear this type of sound of so, you know, tends to get a little bit boring. And you know, for those of you who are swing traders, we did post an article about this on the weekly report, and we said that normally if you're a swing trader, you might want to adapt your strategy a little bit and maybe work on support and resistance levels. So, okay, let's see what's happening. First of all, US dollar not going anywhere. As you can see, we're stuck between support and 81.47, which is our resistance level. We are smack bam in the middle, and what it looks like is at the moment nothing's really going to happen. We haven't got really that much data coming out this week. We've got earnings season. The main movers that are probably going to shake the markets this week are going to be Goldman Sachs and Google. Google's coming out on Thursday. Now, if we just flip over to the S&P 500, and like I promised you, we're going to show you this chart, but we're going to really just fly through this chart for a second. We've got left shoulder here, head here, right shoulder here, head and shoulders pattern. It normally indicates a type of reversal. The only problem is, number one, we did break our neckline. The only problem is that we are now on critical support. We've received 1, 2, 3 dojis, which basically means that there's a lot of uncertainty in the markets at the moment. We are on our 200-day moving average, which coincides with our support level. You can see there's a lot of support around this area. Now, what I do want to talk to you is about stops. Now, a lot of people are looking at these charts and saying to themselves, all right, there's a lot of support around this area. So what are we going to do? Maybe let's buy a position, and then we'll place our stops right under the support level. This is our support level of 877. Now, basically, what that means is that this area around here, let's just change the color on that. This area around here, there are a lot of stops around this area, even though we have got support roughly around here, around the 810, which is also a critical support level. There are a lot of stops around this area, which means that if we do break down, we could see some dramatic selling that would probably die down around this area, around 810, 820, 830. So we'll probably receive this large candlestick, and then it will start to die down as we're coming up to our major support level, which is support number 2. So how would we really play this? Well, basically, I'm not really looking for any dramatic movement on the S&P 500. I think that the summer is going to really play out. We're going to receive this type of consolidation pattern throughout the whole of the summer, especially as the US dollar is not really going anywhere. If you remember, there's this inverse relationship between the S&P 500 and the dollar. As stocks drop, the US dollar climbs, and the opposite. And if we see at the moment, the US dollar is not really going anywhere. S&P 500, it broke its head and shoulders pattern. It started to decline. We are now on major support, and remember there are a lot of stops around this area, so probably investors are trying to hold up the market a little bit above the 880 level. We're going to have to see how it plays out. Now, what I also want to do in this video is just show you a relationship. This is something that I tend to look at a lot, and it's a type of correlation between the US dollar against the Japanese yen, the currency pair of course, and the S&P 500. Now, if you just remember this chart for a second, you can see we've got the left shoulder, the head, the right shoulder. We did break out, and now we are on critical support, which could lead to a breakout. Obviously, if nothing supports the markets, then we are going to break to the downside. But what I want to show you is this. Now, this chart that I've brought up is the US dollar against the Japanese yen. It's a currency pair for those of you who are not Forex traders. And what I want to do is I just want to show you this nice correlation that I've been looking at. If you look carefully, doesn't this chart really resemble the S&P 500? We've got this down pattern, double bottom, head and shoulders, 1, 2, 3. We broke our neckline, which was roughly around here like that. We did climb lower, and then we started to range a little bit, and now we have broken our support level, which is major support around the 93 area. Look at this, really does resemble the S&P 500. And look what's happened. This happened last week. Now, if you look carefully at the chart, you will be able to see the resemblance. And look at this. This is already broken down. This is broken down at below our support level. And this has made me thinking that maybe we could see a break lower on the S&P 500. But if you look, we did receive this dramatic selling pressure, and then we bounced higher, and now we are starting to range again. And that's why I'm saying on the S&P 500 that if we do break down, we might receive some dramatic selling, which will then die off and then head back into range. Alright, so let's sum it all up. Basically, we're in summertime at the moment. I wouldn't be looking for any dramatic moves, only if, I don't know, US government, they suddenly come out and surprise the markets, or we receive phenomenal results from Google or some market mover. If we don't receive any data, I have a feeling that in the end the markets will just give way. There won't be enough buyers in the market to hold them up, and we might see some selling pressure. We're going to have to play it by ear, see how it turns out. You now know how the markets should play out. Obviously, we're talking about a textbook scenario. It might not occur that way, especially with all the volatility in the market. Let's see how it goes. For those of you who are trading, support and resistance is the best way to trade at the moment. There really aren't any swing patterns. There's nothing really much that I'm finding. If the S&P 500 does break down on stocks, then obviously we can be shorting a few different things. On different currency pairs, I would look for positions maybe to sell different currency pairs. Let's see how it goes. We'll post a video as things occur. Check out our daily reports. We normally post different signals and stuff like that on the reports. Even the S&P 500 and the US dollar Japanese yen chart we did post on the daily chart. Again, my name is Adam. Hope you enjoyed the video. This is Dodjit.com.